this week's Midweek Market Focus. My name's Andie Hewerdine, one of the trader coaches from Knowledge to Action, and today we're going to look at the time frame correlation and the importance between different time frames and how you can use that analysis to find potential trading opportunities and how you can trade some daily trades on some of these smaller time frames with a tighter stop loss. So the whole concept here is looking for the daily positioning, drilling down to smaller time frames for the confirmations and for the entries, and then letting the trades run. Now on the screen here we've got the euro dollar, and we've got the daily, the 4 hourly, the 60 minute and the 15 minute. Okay, and we're going to have a look through and try and find some potential areas where you can identify trading opportunities and how you can then drill down to the smaller time frames and execute on those positions. So first of all, we need to have a bias as to which way we're going to trade. All right, and I want to look through some of the positions I've taken over the last 2 or 3 weeks, just so I can show you my thought process at the time. We're going to jump back so we can't see the future, and we're going to have a look at it step by step as to how time frames correlate and how you can find your ways into trades. So first of all, we're going to zoom back to the daily chart. We're going to put that on the screen. Alright, so first of all, let's find our trade trigger. Well, I'm just going to jump back here to this particular point in time. Well, we have a pretty strong RSI divergence. Okay, it's not the best in the world, but it's a pretty good RSI divergence level, and we can see that price is heavily overextended. Plus, we've got the nice little bonus of price very close to bouncing off of a fib level there as well. Okay, so we've got several different confirmations there. We've got a big number here as well, 147. So we've got several different reasons, especially after this train track reversal, to look for a potential turning point. Now, we don't know that this is going to turn. We need to just point out that we have no way of knowing that this is going to turn, okay, as we can never know the future. But we want to try and find these trading opportunities, drill down to smaller time frames, and execute off of, as Rob Culver would say, an elegant entry. So we're going to drill down to the 4 hourly now, and this is the actual turning point that we see. So we've seen lovely higher lows and higher highs all the way through this run. Suddenly we get ourselves higher high, lower high, and a pretty strong horizontal level that gets broken. So we're actually looking for an entry here off of this lower high. This is where we really want to get into the trade, off the lower high. So we drill down to a 60-minute chart, and we find ourselves at lower high. Okay, so we first of all found an area on the dailies at 147, plus a fib level, plus the RSI divergence, where we want to try and find a way into the trade. We've then gone down to the 4 hourly and see that we've got ourselves the makings of the lower high, and the 60 minutes got the lower high here as well. Okay, so we've got a lower high on the 60-minute chart. We're interested. Now, the 60-minute chart's quite clean and clear. I'm not suggesting that you trade power pivots off of this, but I am recommending that you look at swing highs and swing lows and look for that turning point where you get the lower high, because that lower high and the break of the low will put you into a really well positioned trade. And if we can drill down perhaps to a 15-minute chart and find ourselves an entry, that makes a lot of sense. So let's find ourselves where we are. Right, so we find ourselves at the 147 level. We see that there's a huge level of resistance here. we see we get lower lows that break down the lower high that we found earlier on the 60-minute chart. And not just that, we've got our first of all, this is the 60-minute lower high here. But to get into that, we're going to have to get into it with a 50-point stop. Now, a 50-point stop on a daily trade is still pretty nice. However, if we can find ourselves an entry whereby we can get perhaps a 35-point stop, it's going to really increase your reward to risk. So we let the lower high play itself out in the 60-minute chart first of all, move down, and then give us the lower high in the 15-minute chart, which is here. And that means we've got the confirmation first of all that we've got a lower high on the 60-minute chart and a lower high on the 15-minute chart. And we can enter here. Suddenly now we're talking 35, 40 point stop loss. Okay, 40 point stop territory is big money territory when you're trading on a daily move. Okay, so we're just going to squeeze this data up and we can see that we've got ourselves entered into the trade here. Now I'm just going to get rid of those original levels from the 60-minute chart and jump back to a 60-minute chart for us to have a look at how we can potentially then trail our stop loss. Alright, so that's our entry there. We're on a 60-minute chart now, and we found the entry on the 15, and you can check the time frames here as well. This is an opportunity that I traded because of the time. Okay, just inside my trading session, went through about 11 o'clock-ish. It was a nice tradable opportunity. Okay, and as it pushes down to the downside, you get that strong thrust off of this horizontal level. Okay, so we're not going to turn around and move the stop down just yet, because there's going to be some kind of a kickback. But the good confirmation is that the 20's just crossed over the 50 moving average. So we're thinking that our stop is probably going to be pretty safe. It should hold. Now, when you're taking these kind of trades, you need to be aware that the reward to risk is going to be heavily in your favour. Okay, so these aren't going to be 80 and 90% success trades. These are going to be ones that are going to take a couple of cracks at just to find it. But when you find it, you're going to get 5, 6 and 7 to 1 trading opportunities. And you don't have to really have that kind of a great success rate to still make a lot of money. All right, you can have a 25, 30% success rate and be very, very happy at 7 to 1. Okay, so we see we get this initial move first of all. We're waiting for the pullback. All right, and once we see it move away again and break the low here, then we'll move the stop down to this level. Okay, just so we're giving it some breathing space. We've seen another lower high, another lower low by breaking this low, and we've got price action moving in our favour. Brilliant. Okay, so we're then going to turn around and we see lower high doesn't give the lower low, but confirmed lower high here, break of the low. Stop loss is going to go down now to this kind of a level. Okay, and we see that big run off to the downside. All right, and we see these lower highs here. Okay, they get broken, so we copy this down, and we have our stop loss behind these swings. All right, and we want to keep trading swing highs at this point to lock in profit. All right, now bear in mind that we're still trading a daily move, so we've got to be aware of what's going on the daily chart. Let's swing high there. Okay, so we have a look at what's going on the daily chart very quickly. And we see the price has pulled right back down to the 50 moving average. Okay, and you can see that on these screens are now linked, so you can see at this point here as it comes down, the 50 moving average is at this level. Look at that horizontal level that gets displayed there. The 50 moving average on the dailies, and you can see it now on the 60-minute chart. So you can see that level there getting respected. All right, we've got our stop down, so that's fine. All right, and we're going to look to lock that in, but we don't really expect price to turn out, or we don't really expect price to keep going down through the 50. We expect it to have some kind of a reaction off of it. So we keep trading the swing highs, okay, until we have a reason to get out the trade. Now that one there is a Friday evening. All right, so Friday evening there, and we're looking at about 6 p.m. That's when I'd normally be leaving the office, so that's realistically where the stop loss is going to go down to. Okay, and if we have a look at this, you can see the target level that I aimed for. Okay, nice horizontal level. All right, you don't know where price is going to go to necessarily, but we've got ourselves a nice target level to aim for first of all there. Keep trailing the stop loss down. All right, and we're walking away there with a 40-point stop loss that's having generated 250 points. Okay, 40-point stop loss, 250 points. Okay, now that's a pretty positive reward to risk there. All right, so we're looking realistically at just over a 6-to-1 trade. Okay, so that's a nice positive 6-to-1 trade there that we've made using multiple time frames from the daily, the 4-hourly, the 60-minute and the 15-minute, and we've just trailed the highs down on the 60-minute chart to lock in profit. And yes, we know we're not going to win every single one of these, but because the reward to risk is so heavily in our favour, we can quite happily trade it. Okay, now if I ask you what you expect to happen on the daily chart when price gets down to the 50 moving average and a horizontal level which you can see, we know that price is pretty likely to turn around and then bounce off that level. Now, we don't know necessarily how far it's going to bounce, but we do think it's going to bounce. All right, oh, cool. Okay, so we're going to have a look at that now on the smaller time frame. So this is where we ran down on the 4-hourly. Let's find ourselves an entry perhaps on the hourly. Here we go. Here's the hourly chart. And we trailed our stop loss down before to this kind of a level. Suddenly we find ourselves high, low. So we've got a higher low and the break of a high. Now, I'm not going to be there at 1 o'clock in the morning to trade that. Okay, but I got in at 7 o'clock over here on the break of the highs, stop at the lows, but I did like the 15-minute chart. So we're going to drill down now to a 15-minute chart here, and you'll see it a lot cleaner. Okay, this is the congestion zone that we're looking at here. Okay, we see the first higher low, or double bottom should we say, that breaks the high and pushes convincingly up, okay, towards the 100 moving average, breaking that 50 that's been respected, and breaks the swing highs that we've seen as well. We then get a confirmed higher low. So here's our entry level. Entry, stop loss, okay, and let it go. All right, now this is later on in the afternoon. So that you've seen the higher high, you've seen the higher low, these are your entry levels. And we're getting into the trade there now with a nice 70-point stop. Much better than 150 points on the dailies. Okay, so we got ourselves into the trade. And we're going to look then to trail the stop loss, not on the 15-minute necessarily, because it's going to get a little bit erratic on there, but on the 60-minute chart, we're going to then look to trail it. So we're getting into the trade here. We'll trail the swing lows, okay, as they occur. All right, and we'll then look to come out the trade as the position changes. Now, as this changed over late in the evening, I wasn't there. All right, but come the following morning, and they managed to get out of the position right about this kind of level at about 7 o'clock, because I'd seen that the swing low had been broken. Okay, I'd got a stop loss that I'd moved up at the time. Well, I think my stop only got up to here. Okay, and I managed to get out around this kind of a position. But we're looking at, again, trailing the swing lows and just coming out the position when you get the break of the swing low. All right, now I understand you're not going to be able to trail every single swing low. And it's very easy seeing it in hindsight. Okay, realistically, if you were still there at 8 o'clock, there's your trailing stop underneath there, and you get taken straight out. But if I've just placed a trade there at say 2-3 o'clock-ish, just after lunch, there's no way I'm going to turn around and move the stop at say 5 o'clock-ish or 8-9 o'clock-ish there. Look, because 8-9 o'clock I'm not in the office, I'm not trading necessarily, so there's no reason for me to then turn around and actually move my stop, because I just won't be there. All right. If I'm right, I'm right. I'm wrong, I'm wrong. I've already had a 6-to-1 trade. It's not the end of the world if this goes wrong. Okay, so you come in the next morning and you see you're getting yourself a potential level here, and you leave your stop there still. You wait for price to break this high, and at 10 o'clock it breaks it, then the stop goes up. Okay, and we see this nice solid move, and you're going to be really, really tempted to take the money there. All right, but how do we know this isn't going to keep going? So we wait for it to come back down again, create the swing low, break the swing high over here. Okay, so swing highs are coming down, but the swing low gets formed, breaks the swing high, off it goes again, move the stop from here, up. And as it really heavily accelerates away, you can quite cheekily just tuck it underneath there as well. And for each higher swing high, there's obviously a higher swing low that we can move it up underneath. Now we don't want to turn around and stick this 2 points underneath it. We need to give it breathing space. You notice that these lines are just drawn in, they're eyeballed. That's all they are. They're just rough levels to place your stop loss. Okay, underneath the swing low after it's formed. So I don't move it on this bar. I'm waiting until probably this bar here before I can then start to move the stop. Okay, and looking at it here, I think 4, 5, 6. That was where my stop was. Around that kind of a level when I turned around and came out the trade over here. Okay, just got out the trade at this kind of level about 6, 7 o'clock in the morning because I realised the swing low had been broken. Okay, with a lower swing high. Okay, so you can't have you can't just take it off of a lower high. You need to look for the lower high and the break of the swing low to confirm the change in trend. All right, or the higher low, break of the swing high for the change in trend. And that's the nice confirmation there, is that this one here, for example, gives you the lower low, but there's no lower high particularly. Okay, so there's no change in trend. When you get the lower high, break of the swing low, we've got that change in trend. Okay, plus, again, we have ourselves bouncing off of a horizontal level, okay, which we can see from over here. Okay, we've got a horizontal level that's getting respected fairly well, so we're just going to be aware of that. Okay, and you can see it comes straight off the one, just short of the 144.50 level. Okay, we know that price overall is to the downside because the trend has definitely changed, so we're trading a retracement there effectively. Okay, trading that retracement. All right, as we trade that retracement there on the 60-minute chart, lovely, thank you very much. Okay, you can see we can do that multiple times. Okay, so we've got the higher low, off we go, the higher low, off it goes. All right, and then when we get that change in trend, we can take the break of the swing low and run it down. Okay, and we can look to keep the momentum on the downside. So we'll look at both of these positions here. First of all, the higher low, off it goes, trail the swing lows. All right, we get taken out, lower high, off it goes, trail the swing highs, and you can see we're getting in with some really, really nice tight stops here. All right, we're not looking at necessarily getting in, break of the swing low, stop at the swing high up here with a 90-odd point stop. We're waiting for the lower high to form and break the low after the first one, so we get that confirmation, that confirmed move. Suddenly we're in with like a 33-point stop loss. All right, now I was a little bit silly. I came out here. All right, still a nice 2.5 to 1 trade, but I really should have let it run. Okay, trailing swing highs. All right, just bringing it to the downside. Trail it, trail it, trail it. 235 points from a 30-point stop. 7 to 1 is that? Okay, it just requires you to have the guts to keep the position on and trail behind the swing highs. And provided that you do that, you get some really, really positive reward to risk trades. Then we get that change again to the higher low. Off we go to the upside. Lower high, break of the low. Off it goes again. Okay, and we got taken out here. You'd see a confirmed high, move down, stop loss here, and through the news on the Friday, it shot up, shot down again, we get taken out. Okay, but that's no bad trade there. It means that we were clever with what we were doing. We got ourselves an 80-point stop. We got just shy of 80 points out of it. Okay, so just short of the 1-to-1. And yes, overall the positioning was right, but you can't help but get taken out by one big news spike there. I mean, on that Friday there was Italian banks stopping trading. There was Greece all over the place. The ECB was speaking. Okay, so it's no major issue if you get taken out of a position in a profit. You know? And let's say that you hadn't moved the stop down, you're laughing there. Okay, but I would always try to trail those swing highs. Okay, particularly when you're expecting price to bounce around this kind of a level, because we've got that 50 moving average sitting there as well. Okay, and unfortunately it just takes it out. All right, but you can see the whole emphasis here is to make sure that we're trading, looking for that first lower high, take it short. First high low, take it long. First lower high, take it short. Higher low, take it long. Lower high, take it short. Higher low, take it long. Lower high, you do the rest. Okay, but you can see what we're looking for there. All right, and that's just looking at the 60-minute chart without any kind of an emphasis on the dailies. Okay, we're only looking at one currency pair. The key is to check that daily time frame first of all. Find your reason for being in positions, i.e. getting long off of here, off of the 100, because it's bouncing, and we get ourselves a nice trade. All right, and you get yourself into a nice position that you can take some money on. But rather than turning around and perhaps getting a 1-to-1 out of it, perhaps on the dailies, we really want to make sure that we're in a position trading for a 4-5-to-1 off of, say, a 15 or a 60-minute chart, because it puts things a lot more in our favour. We can have a lower success rate and still make a lot of money. And because we're trading with a stop loss that's roughly half the size, we're more easily doubling the reward to risk. We're probably losing 10-15% on the success rate. But who cares about losing 10-15% on the success rate when the reward to risk is so much slanted in your favour? I mean, this is a Rob Colville dream here. Okay? And when we see a reason to then be short, okay, we've got a horizontal level reversal. We'll look at then getting short. Oh look, break of the swing lows, stop at the swing highs, off it then runs. Okay, now it's simple to look at in hindsight, but it actually is that easy when you look at it in real time as well. Okay, it's just a case of making sure that you do it with a bias on the daily chart, so know which way you're trading. Look at the weeklies. Okay, first of all, work out which way you're going to trade. Lower high, which way are you going to go? Okay, on the weeklies. Dailies, major lower high, you've got to be short. Okay, so get your bias from the higher time frames and execute off of the smaller time frames. Because if you're right, it's going to be a big one. All right. Now, a lot of people trade strategies that are either inverse reward to risk or just for 1-to-1. You know, so you're risking 1 to get a half back, or 1 to get 1 back, or perhaps 1 to get 1.5 back. That's great. Okay, that'll be what I'd call income-based trading that has a higher success rate. Okay, this is wealth generation trading. This is wealth management trading, whereby your account will just jump suddenly by 5-6%. Okay, and that's the kind of trading that you want. When you're trading for income, you want the high probability, low return that's consistent. But a lot of you guys are wanting to grow your accounts quickly. All right, the best way to grow your account quickly is to do it so you've got a heavy reward to risk in your favour, so that your account hurdles through limits. So I know one person in particular that's trading with and he's hitting a limit on his account whereby he just can't seem to get through it. He's trading a lot of inverse reward to risk and 1-to-1s. He's doing really, really well, great success rate, but keeps getting up to the $5,000 mark and then just coming off of it slightly. One of these trades is going to push it straight up to 5.3, 5.4 quite comfortably and really push through that level. All right, and that's really the key, is to make sure that you get the nice heavy reward to risk trades that are weighted in your favour, that will push you through the boundaries that you're currently sitting at, and that will really start to grow your account very, very nicely. Okay, so it's not something that you're going to do long term, perhaps when you've got much larger sums in your account, but it's something that certainly for that I like to do, is that way it catapults your account forward into bigger figures quickly. All right. Now let's have a look at some other examples. For example, on the Swissy, because I managed to catch this quite nicely. All right. So we're looking at the dollar Swiss here, and just looking at price action, I noticed that the horizontal levels of support were becoming resistance consistently. Okay. So looking at the horizontal level here, I realised it had already acted off of it once. It was likely to go off of it again. Okay, plus I've got the really, really nice lower high overall, weekly lower highs, moving averages fanning out. Yeah, this is trading 101 stuff. Okay, but who wants to enter into this with a 80 odd point stop? I want something with half of that. Okay, so we draw ourselves down to a smaller time frame. All right, so let's just jump straight to the 60-minute. I like the 60-minute quite a lot. So we get ourselves the lower high, and by the looks you can see the break of the low. Okay, so we get the lower high, which is the important thing. All right, because that lower high, we're now interested in the 15-minute chart. So lower high, awesome. Off of that horizontal level, considering it's moved so aggressively into that, that's your first real retracement, and you were expecting it to turn. Okay, bear in mind you are trying to pick a turning point of a market here. We're not mucking about. We're not aiming for a one-to-one trade. Right? We're looking to capture a turning point of a market, not to the pip, but we're trying to wait for that confirmation and then get into the trade. Now, some of you will be going, oh, I wish I'd have got that power pivot. You're never going to know that's the one that's going to go. So you have to drill down to the 15-minute chart and look for the confirmations. Okay, so over here we see we've got ourselves that lower high, and it pushed down, broke the low. Okay, on the 60-minute chart. So we then got the lower low. So we now need to find ourselves a lower high, lower low on the 15-minute chart. So daily, we've got our bias. The 60-minute chart gave us the lower high, and we want the 15-minute now to give us the lower high, lower low. So we got ourselves this lower high here after the breakthrough. But there's no way on earth I'm going to turn around and risk 45 points here after that big oversized bar. I want a tight stop. Okay, therefore I'm waiting for it to push down and give me another lower high on a 15-minute chart. So I'm entering here at 85.06 on the break of the low, stop at the swing high, and I'm getting in with a 25-30 point stop. Okay, I'm having to be patient, but again, look at the timing. We're talking 8-9 o'clock in the morning. This is prime trading time for you guys. All right, and if this is right, this is going to be a positive reward to risk in our favour. And my target was 83.60, was it? That level there, horizontal level, that's where I expected it to go to. If we're risking 25-30 points, looking for 150, okay, we really know that's a 5-to-1 trade. We have our oh my god moments, okay? We have our oh my god moments, what's going on there? But look, it still sticks to that horizontal level. It still respects it. Okay, so we get into profit, retraces slightly. Well, there's no big shame there. We expect it to come and retrace slightly on us. But it does run quite nicely down. Oh, there we are, that's the target, look. Cool, and it goes and hits it. Okay, and that's the kind of reason that we want to go for. We want to go down to the swing lows that we're aiming for, and you can see that there. Huge level at that point. So we just bring it in very slightly, and we get ourselves a very, very positive reward to risk trade that's in our favour. All right, and yes, you can choose to trail your swing highs perhaps on the 60-minute chart if you want to. Okay, certainly you can do that, whereby we got in at the top here. All right, oh sorry, don't tell a lie. We got in at the top here. All right, and we're looking to then just trail swing highs. Fine, we get taken out perhaps there. All right, but this is the reason why we give it breathing space. We don't go and whack the stop straight on top of it. We give it breathing space. You know, we're talking 5 or 10 pips here. All right, and then even if we did get taken out there, there was still another lower high here for the entry that we could run down. Okay, so even if you got taken out of this one up here for a small loss, 10 pips, whatever, okay, you're still able to get in again there with a 23-point stop loss and a 100-point target, a 4-to-1 trade. So you might lose 0.25% up there, but you're still bagging a good 4% out here. All right, and that positive reward to risk nature really resonates well with me. I like to have both styles of trading in the arsenal. So you've got the income-based trading that comes in 4 out of 5 days a week, and this one that comes in perhaps 2 out of 5 days a week. But the days that it comes in, you have a really big smile on your face because you've just done your week's money in one trade. Okay, and it really will push the account forwards. Okay, so let's say that you turn around and take that there. That's a 4-bagger overall. 4%. Are you really going to carry on for the week? 4 weeks like that, back to back, you're doing 16% a month. That is flying. All right. Now, just doing this and following this on Euro and Swissy over the past, well, not including last week, but the 2 weeks prior to that, pulled about 17% out. Risking 1% with some really, really tiny stops. I got a little bit more time to trade than usual, which is quite nice. Now, 17% in 2 weeks is more than I'd ordinarily do. Okay, that's a good, a very good period to go through. But that's the kind of things and the kind of returns you can start to look at here. All right, you really can start to find some really, really nice reward to risk trades, and it just helps catapult things massively in your favour. 17% in 2.5 weeks is a good month. So you don't really need to turn around and try and trade really, really aggressively with this. You're just waiting for price action to get to certain levels, and then you're looking for the entry. So it's not as stressful either. So all that you're doing is you're aware of certain levels, you wait for price to get there, and then you place your orders. You're not sitting there live trading, boom, 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 which is great to begin with, but it really does start to take its toll after a while, because you get stressed out with sitting there, placing the trades, having to watch the screen. Now, that's great because you are in control of your money and what you're doing, but this is a nice relaxed way of trading that will suit quite a few people that can't be at the screen all day. All right. Certainly, I like to have some of these running in the background while I'm still doing my snapbacks and some of my range-based trading that I enjoy on the smaller time frames. But that gives me my consistency, and this just gives me the big bonus that comes in. And ideally, you're looking for one of these once a week. All right. You get one of these once a week, you're going to have a really, really good month. All right. And that's something that's repeatable. We know that price cycles. We know that higher lows and lower highs move price. So that's exactly what we're looking for there. We're looking for price to get to certain levels, find an entry, execute. Okay, I'm just going to draw this on so that you can see it. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. Lower high. Right, suddenly now we're interested. It's that quick. Right, we've got to find an entry. Okay, it breaks the low. Right, we're really interested. And then the 15-minute entry was just here. Okay, how easy is that to do? Yeah, it's a very, very nice, simple trading method that doesn't really require a huge amount of thought. It's just check for the daily levels first of all. Find yourself a 60-minute or 4-hourly lower high. Execute off of either the 15 or the 60-minute. Okay, and that's really what you want to aim for. All right, and this isn't just for FX. We can look at this on the stock side of things as well. So we can run over to, I won't do the E-mini, we'll do the FTSE. All right, higher high, higher low, we're long. All right, and it goes up. Lower high, break of the lows, we're short. And look at the runoff that we get after that. Yeah, so we're looking at the first lower high, at the horizontal level, top of the market. Higher low here, lower high again, higher low. So it's a bit messy there, but as soon as it breaks that level, stop, entry. You know, not a really tight entry there, but we're looking then for our short positions. All right, and you can drill down and you can find some short positions there in the FTSE and in the sectors and in the stocks that'll give you, much better than your 3-to-1s. We're talking 5, 6, 7-to-1 trades there. Okay, and you can see the move that happens afterwards. So we're just trying to find an intraday entry into a daily trade. And if we can get that intraday entry correct, we might have a couple of cracks at it to find it. But when we get it correct, we know that we're going to be in a nice long run that's going to comfortably cover any losses that we've had before that and run a little bit longer and make some more money as well. Okay, and you can look to scale out of the position if it gets to certain levels that are in your favour, and you're at certain profit points. You can start to scale out of those positions. So it's really a case of making sure you find that first lower high, find yourself an entry on the 60-minute or the 15-minute chart, and go for it. All right. Hopefully this has been interesting for you guys to have a look through and understand what I look for when I'm trying to find a turning point in the market. I'm never going to try and sell that because I don't know that it's the top. But when I get the lower high, I can then really consider selling it because I've got that confirmation. Remember, it's really important to have those confirmations, not just on one time frame, but on multiple time frames. So I'm not just going off of a daily lower high. I'm going off of a weekly lower high, or double top. I'm then going down to a daily lower high. I'm then going down to a 4-hourly lower high, a 60-minute lower high, a 15-minute lower high, and I'm getting a nice tight stop loss into potentially a daily or weekly move. All right, and again, you're going to lose a couple, but the ones that win are going to be very, very profitable trades that could sort you out for the week, 2 weeks, or the month. Okay, so it's really, really worthwhile looking at these and finding your entries into the trades. So I think you'll find I've actually got a couple of levels to look at here. So if we just drill down to a 60-minute chart. Oh, perfect. Here we go. We saw the lower high on the dailies. There's your lower high on the 60-minute. Break of the low, stop at the high. Okay. How do we know to do that? Well, you guys look at trend lines. Third touch, lower high. You'd be very, very lucky if you got the power pivot. But just to look at the lower high, break of the swing low, we are talking a 25-point stop here. Just targeting the swing low is going to give you a 6-to-1 trade. Okay, 6-to-1 trades, they help, they work. All right, come out the position. All right, we know that we still want to be short because of the other time frames. Lower high, in we go. Okay, and we can then start to just trail the stops down. High, lower high, in we go. All right, you're not perhaps going to get that high low there, but we've had the lower highs because we've got a weekly bias to be short, a daily bias to be short. We've just executed off of a 15 or a 60-minute when prices were tracing back to levels we expected to get to. Lower high, boom. All right, lower high, off it goes. And you're getting these really, really positive reward to risk trades that are going to help your account absolutely fly to the levels that you want to get it to. Okay, and you can keep running this in the background as your wealth management trading style, designed to just get your account over perhaps those barriers that perhaps are stuck at right now. You use this to don't push through the barrier, completely hurdle the barrier. Okay, and suddenly the barrier just will seem invisible. It's gone, it's long gone, and you'll be focusing on the next level to aim for. All right, so that's what I really want you guys to focus on. I hope that you found it very informative, and if you've got any questions, please do send them through. Thank you.